You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time for the rockin'est of shows. Some may say we are indeed the funnest, the most fun options party, or at least options-oriented party out there. Certainly of the ones that air twice a week. Of course, it's slim picking, so we'll take that win by default. But hey, we'll take the wins any way we can get them. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Oh, what an exciting whirlwind it has been over the past week. A lot of great content for you guys to check out on the old network. Easiest place to do that, of course, is our website, or just go subscribe to our network feed. I know you like OB, or you like Vol View, you like specific shows. Guess what? You can get them all if you subscribe to the network. It makes it easier for you guys. You get to see everything, and also all the other shows we put out there, the interview shows, the futures options, all the other fun stuff we do throughout the week when we're not talking on Option Block or Vol Views or a bunch of our other shows. And of course, you can always join us every Monday, and indeed every Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlers, MIXLR. And however you listen, like a lot of you have done over the past few days and indeed week, a lot of you have hit us up with questions, and a lot of you have questions. I don't blame you. It's a confusing time. So vent. We're here to help here on the old option block. It is Mail Call Monday, after all, so hit us up. Questions, comments, insights, pearls of wisdom, slams for the Rock Lobster. How dare he go to Orlando and all hell's breaking loose? I know, I feel you. We'll get there. But first, let me welcome on the panel. Let me spin the old option block all-star wheel, see who we land on first. This first is going in order today. It's starting off all the way out there in the hinterlands of Chicago, known as St. Charles, where we are joined by Uncle Mike Tussaw from RCM Wealth Advisor, and a man who's been known to roll a put or few in his day. Uncle Mike, how goes things today, sir?
Did anything happen today?
Kind of quiet, a bit of a snooze fest. I think the S&P is literally unched and everything else, except for the Apple quadruple post-earnings announcement. Other than that, it's been nothing.
Yeah, that's what I figured. I mean, it's like, does the market even open today?
I need to refresh my screen to make sure these numbers aren't wrong, but I'm seeing just 0.0 unched across the board. So, yeah, going to have to work today to find some content. Maybe to help us do just that, we are also joined the man who's back from his brief hiatus in that most magical of cities. I hear he rode the Hollywood Rocket and the Mummy over there at Universal. Then he went on Space Mountain. He had a fun time. He is indeed the Rock Lobster, Mr. Andrew Giovinazzi. Mr. G, welcome back from the House of Mouse. You still have your ears?
Yeah, exactly. I do have my ears. It was actually nice to talk to live people as opposed to talking to my computer screen, which is making me a little batty in my old age, I have to admit. So Orlando was quite nice and nice talking to the folks.
You braved the hallowed corridors of the money show, something I haven't done in some time, and I'm thankful for that. But we'll get to that in a bit. Let's keep on rolling now, right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Yes, it is indeed the portion of the show we break down the mysteries of the trading world and the mysteries that there were unfolding today. If you were confused by that open, Uncle Mike and I were just joking. It was indeed yet another tumultuous day on the street. It was confusing for everybody. Bulls, bears, what's going on? Are we selling off? Are we rallying? 50 handle range in the SPX today, listeners. So depending on what time you tuned in, both sides of the coin were right. Finishing up the day, those up strong on the day, I should say. Most of the major indices up well over 1.5%. S&P a little bit north of that range. The Dow and the tech-heavy NASDAQ threatening 2% up on the day. So the market giveth, the market taketh away. It is giving back today, at least to the bulls. And it is taking away en masse out there in the old VIX cash, which is off over 3 handles today. So right about a little over 11%, actually. Back in firmly in the mid-20s. If you're kind of scratching your head saying, wow, 50 handle range in the S&P, and yet VIX comes in. Yeah, we'll get to that in a little bit because you might be wondering, people always talk about the downside bias, and we're clearly seeing that today because moves in both directions. Guess what? That's all vol. And yet things are coming in across the board. Our old friend VVIX off about 25, 26 handles today as well. Still in the comparatively lofty 140. That goes to show you just how much things have been rocking and rolling of late. It peaked over 200 last week. VVIX, of course, the volatility of VIX. Talk about it a lot on Vol Views. Don't get to it as often here on this show, but still a lot of fascinating stuff going on. Let's get to all of it. Since he's gone the farthest, let's give him pride of place here on the old show. He was busy, riding roller coasters while I think was selling off. So he may be a little bit confused that things are going crazy. Mr. Rocklops, I don't know if you caught it last week when you were on vacation, but there was a lot of tumult in the market last week. So now that you're getting back up to speed, what's your take on everything that's been going on today, sir?
So this is one thing I would say is, for all our listeners, SPX had a 50 handle range today. So if you look at the VIX, is that about what you would expect? We opened 30 this morning, or right around 30. So is that about what you'd expect? That's the question. And the answer is yes. VIX's 30 is implying almost 2% moves a day. So the funny thing is this should not surprise anybody. When VIX is this high, it is expecting moves close to 2% a day. So none of this should be surprising. So if you're looking at like, oh no, another day of volatility, well, VIX is telling you it's going to be volatile. It's just sort of like when VIX was 9 and the market kept going up, and everybody's like, oh, why is VIX going to tell us it's going to get more volatile? Well, as long as we just go up 0.5% every day, it's going to be 9. So one of the uses of it is expectation per day. So if you're looking to do certain types of trades, this higher VIX is, higher expectation of movement. So, you have that sharp sell-off in the morning. You're like, well, we got a high VIX. We could go way, way down, or maybe if it turns around, we'll get rocketing right back up again. And sure enough, you get that kind of a move. So when you're looking at VIX at this level, you have to think of what really is realistic. And when VIX is this level, almost 2% a day is probably normal. So if you're selling near-term options, the chances of you just getting steamrolled are pretty easy. Just like if you're buying near-term options and you are not, let's just call it, diligent about putting in a stop or a close if the market starts to turn the other way, because that daily move can be pretty darn severe. So you have to kind of put that into your planning, so to speak. So from a kind of a longer range perspective of trying to sell options, you have to be mindful that those big moves are what you're going to see intraday. So yeah, at the Money Show, this was a subject. We did talk about VIX and the vol ETNs and kind of explaining why XIV fell apart. And when is this going to end? I don't know. What's funny is everybody was worried about higher interest rates last week, and bond prices kind of tanked and yields went up. And then right in the middle of that, we're going to get $1 trillion of new infrastructure spending that nobody really has figured out how to pay for yet. So I think it's a little bit of bizarro land, but at the same time, I think the market is now like, oh, okay, well, I think we're going to have a free interest rate environment, something maybe a little more close to maybe the cost of money, this, that, and the other thing. And we might see a little bit more volatility, that low vol market where interest rates are almost artificially depressed. And we saw that actually before the last financial crisis. As I recall, like the lowest 2007 or 2006 was an insanely low vol year before all that picked up. So we had a lot of low vol. I'm not saying this is another financial crisis, but the fact that rates are starting to move again, that adds a little uncertainty, and a little uncertainty usually means that volatility ticks up a little bit. So I don't think we're going to stay at 25 forever, but at the same time, we have to stop having days where we're moving 50 handles a day in order for vol to come down. So today, I think, was a big tech rally, which I think is helpful overall because that's been driving stocks. I think Google was up 20 points. Apple was up 5 or 6 points. It's just really big moves. So Gamma, very hard to sell. The Vega, the vol part, maybe a little easier to sell. If you're going to sell options, you want your duration to be very long term so you can kind of manage the swings. And I don't see a lot to change that until we start having days where we kind of get back to 1% per day move or less. And we are not there yet, although I believe that March future is that still in the teens? I just was looking at it here a few seconds ago. The March future is 2017. So it's not, the 20 handle I think is still significant. There was a time when that future was probably $12. So I don't think it's going back there next week, but there is some room in that future to come in, and it's certainly expecting VIX to drop. But the whole term structure is flattened out around 18. So again, you're not looking for a ton more volatility, but they're not really ready for this current volatility to go away just yet. And we'll see what happens if we get another couple of days. I like to see if we get 2 more days of less than 2%, maybe 1.5%. I think that you'd see VIX around 20, and then all of a sudden VIX in the March future would be flat, or what I call that's a more flat term structure. And then the vol trades to me are going to get a lot more interesting when it gets that flat, because it's not just that crazy high VIX, and vol as a directional trade, at least from a vol product point of view, gets more fun at that point.
It's all fun. I remember it doesn't seem like just a couple of weeks ago. It actually was a few months ago. I remember, though, when people were just hemming and hawing and wringing their hands because they wouldn't crush. I believe it was the October future when they wouldn't crush it below 12, and they finally did, and it was a big deal. And it just doesn't seem like that long ago that we were hemming and hawing about that. And now here we are lamenting that future back in the 20s, saying, when's it going to go back into the teens? So, yeah, you giveth and they taketh away out there in the VIX Futures term structure as well. Uncle Mike, I joked at the top of the show you like to roll some puts, but this indeed could be an interesting time if you are indeed a perma-bull like yourself to maybe do just such a thing. So what have you been up to since the last time we chatted, sir?
Oh, quite a bit. I actually have been up to so much with the aggressive SPY fund. I have to put out a teaser right now, Mark, for the strategy block on Thursday, because this is going to be the strategy block coming up on Thursday is possibly going to make the top 5 or top 10 all of my all-time strategy blocks in terms of what I actually was able to do this last week. But with that tease being said, I will talk about some other things that I'm seeing overall in the marketplace. I think bonds are becoming a hot topic again, in that we have a 10-year note that's approaching 3%. Now, what does this mean? A couple things of what it means to me. Number one, over these last few years, I have been keeping people out of bonds for the most part. Don't get me wrong, we have some exposure to bonds for people that need income and just a few other places here and there. But as a whole, on a macro level, once again, yes, I have some clients in bonds where it's a fit and it makes sense. But on the macro level, I really have shied away from doing things with bonds just because of the fact that the risk reward really doesn't make sense to me. On corporate bonds, you have the risk of rising interest rates, as well as the potential of default. Now, I'm not so concerned with default right now. On the corporate side of it, I do think that we have a pretty strong corporate structure overall, but if we're going to have rising interest rates, it's kind of hard for me to justify getting a lot of exposure in corporate bonds. So I've been shying away from that. Municipal bonds, well, that kind of depends on the situation with which you're in. You still have interest rate risk, but if you live in the great state of Illinois, don't get me wrong, I love St. Charles. It's a great place to live and do business and work and raise a family. However, let's just say, without getting too political, the state of Illinois is not the ideal place to buy municipal bonds, in my opinion. So with those two things in place, the fact that you're really not getting a very good rate of return on bonds right now, and you have yield risk, you have interest rate risk, I've been keeping people away from it. Now, there's two reasons why rising interest rates that have risen a little bit over the last couple of weeks are catching my eye. The first thing is that I might actually start putting people into bonds more frequently now, and it might start becoming a regular part of my investment allocations for clients. Not yet. I still think we're a little ways away from there, just for a quote-unquote safer section of the portfolio. In years past, I've owned IEF and TLT government treasuries and have sold covered calls against them to enhance some yield and done things like that. I'm not quite ready to do that as of yet, but that's something that might be popping up on the radar, perhaps owning some corporate bonds, that type of thing. But here's the second part of where I think it's going to really affect the option traders. It might be of more interest for this show, and that is Roe. If Roe ever returns, this is something that I think could really have an interesting effect on option trading. Now, I talked about the skew fund a couple months back in terms of buying an at-the-money put and then selling a covered call slightly out of the money and then having essentially a risk-free trade. You're not going to make a lot of money on it, but it's one to where you have your protection paid for and a little bit of upside factored into it. With Roe coming up a little bit, with us getting the increased interest rates, now those are going to become spread a little bit further. And you might be able to take advantage of that when doing longer-term trades. If you're interested in learning about what I had talked about a few months back, I believe I had talked about in the show in October. I think it was the show right after Columbus Day, to where I went through the scenario of how this strategy can be. But with rising interest rates, this can have a very enhanced strategy or have a very enhanced rate of return across the board. So that's another thing with which I'm pretty excited about. In terms of the rising interest rates, is that yes, your bond fund values will go down, but this creates a whole other set of opportunities that we have not had in many, many, many years. I'll probably start becoming more of a bond buyer and doing more things with bonds if the 10-year were to get closer to 4%. Now, we're a ways away from that, but we've been a ways away from 3% for quite a while now, and we're approaching that number. And now that starts to get a little bit more interesting, at least with what I'm looking to do. On the overall market itself, Apple had a big day today, up 4%. A lot of buyers coming in on that. Andrew talked about how we had a big tech rally today. It's always exciting when that happens, as tech is going to be a very powerful market leader. Energy came back a little bit today. Energy was actually up 1.6% on the day, or XLE, I should say. So came back in a lot of things that were down. Now, one thing that does need to be mentioned with all of this is the fact that we are still below the open of the year, at least with SPY. So I've done a lot, and I've actually got into a lot of positions in the ultra aggressive ETF strategy or ultra aggressive SPY strategy, which I trade and talk about on the show a lot. And I did that last week. But one thing that still does concern me about this market is that we are still down for the year. We went positive for a little bit today, but we could not hold it. Now, granted, we're up 36 points in the SPX, so I guess I shouldn't be too greedy. But in my opinion, that's the next barrier to the upside. We need to actually be positive on the year again. before we can continue to go higher. So those are some of the things that I saw on the day, and I'll let you take over again, Mark.
Well, thank you for that, sir. Yeah, but you're right. A lot to digest here. A lot of the broad tech names kind of carrying the market today. You mentioned Apple up 4%, Amazon up 3.5% to finish up the day here. The old Googs, aka the old Alphabet, a little bit less bloom on the rose, up actually Alphabet up less than a percent. Goog itself up about 1.5%. So depending on where you're looking, a little bit more strength, a little bit softness. Microsoft only up a little bit over 1%. The old Widowmaker, Netflix, up nearly 3.5%. So kind of pick your poison on the street. Speaking of picking your poison, what a poisonous, crazy, tumultuous week it has been over there at the CBOE, just in terms of their stock and their trading, because it seemed like it was very much a tale of two volume stories, depending on what you wanted to look at. Because of course, last week was just records upon records. Yet the stock just got pounded last week, particularly after the implosion of XIV. A lot of people fearing that this would A, bring more regulatory heat, or which we haven't seen the outcome of that yet, obviously, and then B, of course, maybe take some potentially large customers for the futures in particular off the market. So that combined to really wallop the stock, drove it down, I believe, down to around about, it was threatening, I know, 100 at one point here. Let's see how low it actually got. Got to 96.81. And a lot of people were talking about those power puts and how juicy they were. Well, they came in the money very briefly. So some people had very nervous. Talked to some people this week. It was kind of fun, who probably haven't really traded a lot of crazy options expiration Fridays before. And then all of a sudden, this was a real expiration Friday again. It had some real teeth to it again, particularly if you were short premium. So it's kind of interesting to get their perceptions on what it was like for them, because it's you pop in some tums on days like that. Of course, CBOE rallying today, up 4%. And again, all this tumult, they had a surprise conference call ahead of their actual earnings call the day before. How often do you see that, just to kind of talk some analysts off the ledge? And yet it was, as we predicted, record week for CBOE, kind of across the board. SPX record over the options. These are the options now, of course. About 3.25 million contracts back on the 9th. Second highest day goes back to actually August 21st of 2015. VIX options. Actually, it wasn't last week. It was the Friday before, when our friend the VIX whale, somebody called him the VIX elephant, I should say. That's erroneous, of course. He is known as the VIX whale. It was actually that Friday with about 4.34 million when he did his roll. So actually last week wasn't the top day for VIX options. It was actually only the second highest day with 4.19, followed third highest, 3.5 million on the 5th. So the 6th, of course, which was the big crazy sell-off day on Monday. The futures had their big high day, surprise, surprise, on Monday with about almost 1.5 million contracts, followed by the day before, actually, with about 1.34. Man, they have some funky hours out there. Monday was the sell-off on the 5th. The 6th is when all the stuff really hit the fan, and we saw the after hours in between those two. So those sessions were a little bit kind of mixed. About 1.5 million contracts on the 6th, and then Monday about 1.34 million overall. The after hours also saw some good numbers. About 500,000 contracts in the after hours of the 6th there. Again, that's when all that crazy unwinding was going on. So kind of craziness across the board. And yet the stock taking a bit of a drubbing. It also is taking a drubbing, by the way. I'm not sure if you guys have been watching this. You guys remember last year when everyone was super hot and heavy about a listing of a few new names like Snap and a couple others? One of them was Blue Apron. And everyone was super excited about Blue Apron going public. They went public, I believe, at the end of July or end of June, sometime around that time frame. They had options shortly thereafter. Everyone was excited. Stock was trading around 10, 11 bucks. How the mighty have fallen. It's pretty much about 2/3 off where it was back then. It's trading about 1/3 of what it was, right around $3.30. They are popping off before the bell, I should say, tomorrow. So hopefully if you wanted to trade them, you indeed did already. Of course, it's kind of hard to talk options trading on a $3.35 name because the stock itself pretty much is an option at that point. Still today, it did about 2x its ADV, and they're pricing in pretty lofty, about 65, 70 cents, or right around, 20% out there. So they're expecting something big out of these earnings. We shall pay attention and see. It could be the beginning of a long, slow death spiral, or maybe perhaps a turnaround over there at Blue Apron. Either way, the stock has been feeling it of late. I don't know, Mr. Rock Lobster, any of your hardcores in the pitch chat slinging any Apron or indeed any CBOE, any options on those two?
There was some CBOE action. It feels like it seems like CBOE is getting unnecessarily whipped on the head because of the I think because everybody thinks like the VIX futures aren't going to trade anymore because of XIV. That's what we thought it was. It feels like it could be a bit of a scooping opportunity here. Obviously, it was up a little bit today, but another thing too is some of the Bitcoin froth is off. With Bitcoin, what is it, below 10,000 now? So there's not as much of that anymore. So I think CBOE kind of got hit with a double worry whammy, even though nothing serious has happened. And APRN, I kept thinking about selling the 5-level puts in there, and I haven't done anything about it because it never went up. It's one of my rules that I sell puts. I'm not going to sell them to the stocks till the stock stops going down, and it never did. So I never sold the puts.
But what fun is that? Then you never have those nail-biting, Tums-popping moments. So what fun are those rules?
Yeah, you big wimp.
What is that? Cowardice of the highest order, sir.
I you know what? It is cowardice, but you end up with a lot more stocks than you want if you do that. So I like to see things stop going down before I sell puts them. It's just me, maybe that's not the way to do it, but I like to just see them stop going down at some point.
No, so you just wheel it, and then you just sell the call like 3 handles below where you sold the put. It all works out in the end, right?
That's,
well, the short answer to that is no. It does not work out. All right. We're just joking, listeners. Let you get any bad ideas. All right, let's keep on rolling now. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down what's going on, what's rocking, rolling, what was moving and shaking in today's activity. Gonna kick things off. You guys always ask us, so we always tell you what was lighting it up out there in these mystery, weird, bizarre Tesla catastrophe puts. They were lighting it up again today. The Jan 2019 50s, the puts anyway, doing nearly 500 contracts out there again today. OI is coming off a little bit, off about 1,000. So someone has closed only a little bit shy of 36,000 out there. So someone has put some on and taketh off some of these puts. They're still pretty juicy, 68 cents at 70 here. And of course, our old friends a little bit farther out to pasture here. The Jan 2020 50 puts doing about 70 contracts today, about 7,500 open interest on that strike. They're pushing $3 out there. Let's see, how high did they get in all of the maelstrom and the madness? Oh, about $3. And well, actually, it looks like they had a print back on the madness down to about a 5 handle and change. So interesting, about 5 1/4. Those things got pretty juicy pretty quick. So I'm surprised we didn't see more OI get taken off the board. Those things pretty much doubled. That said, so all you saying these are crazy vehicles, they had a little bit of a shot. See, took something astronomical to make them move a bit, but c'est la vie. That's what happens when you're so far out of the money, such low delta, such a long time to play in those bad boys. Speaking of playing, Mr. Rock Lobster, I don't know if you recall, I think I was talking with the Meatball about these on Thursday. But we saw some weird paper going up last Thursday actually, in our old friend Union Pacific. Someone was just slinging size of these March 130 calls. I think the total on the day, we saw a bunch of these blocks of like 27, 28,000 going up. The total is right around 90,000 on the day. So I think we were speculating with the Meatball there that it seemed like someone was maybe giving up the ghost. They just opened up that OI a few days earlier. It was about 145,000 contracts or so open. There was exactly 145,000 open last Thursday. And we thought for sure maybe someone was either piling in or they were closing. But it didn't really seem like it amounted to really a hill of beans, because on that Friday, and again, even today, the OI still today is about pretty much unched. So a couple thousand contracts changed. It's still about 148,000 contracts open on this strike. So a little bit of weird paper. I'm trying to remember the last time we saw something like this, Mr. Rock Lobster. We saw a lot of prints going up, size contracts all for pretty much $3. So unless he was scrubbing intraday or something else funky was going on, I checked to make sure those prints were legit, and they were. Every platform has them still, and nothing was canceled, anything along those lines. It was just a weird day of someone slinging a lot of these calls right around the bid, Mr. Rock Lobster, all of it amounting to not a hill of beans. What say you to that, sir?
I'm still looking at 147,000 OI on the March 130s, though, right? There's still not.
Yeah, so nothing.
They're still there.
But that was the OI that was there on Thursday, pretty much. Give or take 2,000 contracts.
Oh, okay. So what you're saying is a tons of volume traded and the OI didn't change.
Exactly. And it wasn't like you saw like conversion reversals going up, so the puts were going up too, or something else funky, where we saw a box, maybe something like that. Nope, it was just a strike. Size. A lot of Sturm und Drang signifying nothing. Easy for me to say today, Mr. Rock Lobster. Is that
it is, because there was something, but now it's nothing.
Yeah, apparently it's very weird paper. That's why we call it the odd block, sir. It has been a tumultuous period here in good old Union Pacific. They've been in rally ho mode pretty much since the late summer. They were trading about 107, 108. They're up about 20-odd handles from that level over the past 3 or 4 or 5 months. So, yeah, it's been an interesting road. Then, of course, earnings came along back in the late January and kind of clipped them a little bit and sent them back down to where we were, about 121, and now back up to the old 128 and change level, 128.64 closing today, up a little over 1%. So the mystery continues on this. A lot of noise going up with not a lot actually happening on these 130 calls. It did seem out of sorts. Someone would put all this on and then take it off right away, or someone is expecting this kind of craziness in a name like Union Pacific. Not exactly prone to it. So it was a lot of weirdness, and the weirdness continues, listeners. Keep an eye on this one. We'll keep an eye on it as well. We'll do a little bit more digging to see maybe we can ferret out what was going on behind the scenes. If you have thoughts, hit us up. Let us know. All right, let's move on to another name we've talked about a lot. It's been a while, Mr. Rock Lobster, since we've checked in on our old friend Under Armour. Ticker symbol, of course, UAA, closing today 14 and a quarter, so right around that range. This is another one that has earnings before the open tomorrow. So if you want to play in this earnings, hopefully you already did, because the die is cast, as they say. And looking out here, this is the name that does about 14,000 contracts a day. Doing a lot more than that today, doing about 68,000. Puts out number in calls about 1.6 to 1 out there today. So take that for what you will. The stock was up about $0.50 or about 3.5%. Again, this is the cheapie, about 14 and a quarter. Under Armour has had some issues of late. Be looking here, particularly in the front month contracts and Feb out there, pretty much pick a strike. It was trading pretty actively today. A lot of action out there. What was the most sizable in terms of action, but still there was a lot of paper out there. These were not enormous, but still of note were a lot of puts trading out there, including some opening on the Feb weeklies expiring on the 23rd. The puts on the 11 strike. So the 11 puts out there going up about 2,000 times today. Looks like paper picking up a bunch of them for around 18 cents. Open interest is negligible, so not really much to close there. Now no roll, no other legs going on there. Pretty much is as it looks on the surface. Someone picking up a whole boatload of these after earnings puts. Remember, earnings are tomorrow, so this is the post earnings event type trade. I also saw an interesting put calendar going up there out there today. We saw there was like March, Jan, 12 half puts going up, like that calendar going up about 1,650 times. Seemed like a roll at first for the March out to the Jan 2019. But then we start looking at the OI. The OI is not enough to support it, just barely. A little bit more going up than actually on the OI. So looks like perhaps maybe even piling on. We'll see, because there is about close to 1,500 open on the March 12 half puts. Paper hitting the bid on those for about 68 cents, and looks like maybe scooping up the Jans for about $1.80, $1.81 in that range. 16,000 open on the Jans. So a lot of puts playing out here. Not surprising. Mr. Rock Lobster puts out number in calls today overall in Under Armour. If you look at a chart over the past year, it's been kind of interesting out there. It's been a kind of a slow decline in Under Armour. Started the year right around 21.5, threatening 22. Got as high as about 23.5 back in June, and then it pretty much slowly but surely, until it got to earnings in the end of October. That's when it really got clipped from about 16 down to about 11. So that seemed like that was the worst, and it's kind of been slowly rallying ever since. So it's kind of been a topsy-turvy year for Under Armour. Maybe these puts and the overwhelming amount of puts going up today, Mr. Rock Lobster, perhaps expressing the sentiment that the street has. Let's pull up and see what we got here. They're pricing in, right around, looks like right around $2 for that straddle. So it's coming in right around 13.5%, 14% is kind of what they're pricing in. So it's they're not pricing in a small move. What say you, sir, for all this Under Armour put palooza and Under Armour in general? Any of you crazy slinging this one in the pit chat?
This used to be more fun until they just ruined the stock. I think it was, isn't the Olympic team, didn't they complain about the bad Under Armour outfits they were wearing, slowing them down too much or something?
I believe that was a couple of years ago. Yeah.
Yeah, this is like a $90 stock at one time. So it's just one of those where it has totally fallen apart. Their stuff is not as trendy, and what does Seabass say, or his wife says, as soon as you see all their clothes at the they're at discount in Walmart, you know that it's probably not good for the brand going forward. So I would be I was looking at the pricing. I didn't think that it did not look very expensive to me. I have to admit, you've got the earnings on the 13th. It just, the 13 level for like $1.15. It doesn't look hugely expensive considering how volatile and poorly the earnings have gone here. So this was like a $15 stock. It traded down to 11. So I'm just looking at past earnings as a percentage. Maybe all the bad news is out, but it doesn't look like a tremendously expensive strangle to me for this level right now. Just all these puts and the 12.5 prices just doesn't look like a lot. That's all I'm going to say there on this one. So I like the Jan 19 12.5 put for $1.80. I think as kind of a puts and stock type of trade, it just is not very expensive for that long of a hold time, to be honest. So this premium does not look expensive to me relative to what could be happening. That's what I would say right now.
They also passed your put sale test because they have rallied now. So you could, if you wanted to, if the vol levels were attractive enough, you could sell puts out there as well, according to the Andrew rules of engagement.
It's a start, and I'm looking at it. I mean, you look at this stock and you look at the rest of the market. It's kind of, it's had a hard time, but it's looking less ugly. So this is where like one of the earnings, can they get kind of back on track after an earnings assignment? And then usually if things are a little, I'm more apt to want to sell puts into that, or even in this one. I mean, the 13 level calls for $1 and even going out, a few months. It's just not that expensive. So that's one of those ones where the premium just looks, I would sell the puts to own the stock, but I think you'd probably have more fun just owning straight juice in here on a relative level.
Look at you buying juice, not even getting your juice for free. So intriguing. You must really like it if you're not wanting to get your juice for free somehow with some funky ratio or something else along those lines. Speaking of which, breaking news here, talking of overvalued, undervalued. Just got the email in from Matt Amberson over there at ORATS. He sends me these, his team at ORATS. You can follow him over there at Option Rats. Nothing to do with rats. It's just research and technology services. That's their acronym. They do a lot of breakdowns of earnings season for overvalued, undervalued. We talked about it before. They do a lot of analysis. I'm just combing through it really quickly here to see if I could find anything on Under Armour. I don't think they have a lot of names in here. One of the few they don't have, unfortunately, is Under Armour, because I wanted to see how this level of premium stacked up to past actual moves and the implied volatility of previous quarters. I don't see it in here. So unfortunately, that shall remain a mystery. What won't remain a mystery, though, is what you guys have on your brain, which, spoiler alert, is a lot of stuff. So let's get to it. It's time for the mail block.
It's time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. The mail block, the portion of the show where you guys ask us questions. We return the favor and ask you questions. Last week we asked you, hey, VIX moving like crazy, which is a bit of an understatement for last week. It had blown past our first quiz level of 23. It was threatening 35 at the time. So we dialed it up to the zombie apocalypse level. We asked you guys, where do you think VIX is going to close on Friday? Which was the crazy town level of 30 to 35, or zombie apocalypse level, which is north of 35, or just plain crazy, which was between 25 and 30, or of course the mildly crazy level, which is sub 25. That actually won with 38% of the votes. VIX ended up going out actually on Friday. The cash, of course, we're talking here, right around 29 handle after hitting his high of 41 intraday. So yeah, it was during vol views, it was in the mid 30s, if not high. It was over 40 at one point during vol views, I remember. So it was getting kind of crazy, but it ended up tapering off. So all of you who said just plain crazy, 25 to 30, you were the winner, chicken dinner. 22% for zombie apocalypse over 35. You're looking good until you weren't. 21% for crazy town, 30 to 35. Only 19% actually winning, 25 to 30. This week we asked you, hey, you know, it's a rocky week for the markets. Again, a bit of an understatement. People are understandably scared and confused. So we're here to help. But that raises the question, which product are you the most concerned about over the next month, the next 30 days? So in translation, which product would you not touch with a 10-foot pole that you're that concerned about owning it? Again, we're not talking about speculating to the short side. You could think that's good if you want. That's fine. We'll leave that to you. I'm just saying which one are you most concerned, pretty much from a long perspective. That's where you guys mostly come from. So we gave you 4 choices: VIX, SVXY, SPY, or Bitcoin. All of its forms, BTC, XBT, all that stuff. Mr. Uncle Mike, we shall start with you. Which of these 4 products gives you the most pause over the next 30 days? And more importantly, what do you think our audience is scared about?
Well, for me, it's kind of easy. That would be Bitcoin from the long side of it. I think that's, I wish options would have come out sooner on that. I would have been slinging some puts, but I think that ship has sailed, quite frankly. But we'll see. We might get another opportunity when options actually do come out on it. But yeah, for me, I would say Bitcoin. For the audience, I think the audience is going to say Bitcoin as well.
Interesting. Bitcoin kind of got buried in the headlines last week with all the madness about XIV and everything else, but certainly had a tumultuous week in and of itself. Mr. Rock Lobster, same question for you. Which of these 4 concerns you the most? And also, which one I think is concerning our audience the most?
Well, I think VIX concerns me, but unless you own S&P SPX Premium, you don't have to worry about it. I think the audience is still they were staying away from Bitcoin. I feel like it's the dog with fleas right now.
It is a very flea-ridden dog with nearly half of our audience. This is only early voting. It's only been up about an hour or so. 47% saying Bitcoin in all of its forms. Then it's kind of a slugfest for number 2 between SVXY with 26% and VIX with 24%. I kind of thought SVXY might run away with it just because there's been so much heat on that side of the space lately. SPY getting a surprising only 3%. So clearly our audience in the bullish camp over the next month when it comes to the broad market. So Uncle Mike, that'll make you breathe a sigh of relief. Let's see. We got a lot to get to here. Let's get to them. We got a follow-up here. We got one of our listeners is kind of sneaky. If you remember last week, we had Matt Williamson writing in saying, hey, guys, what's up with those Facebook $5 calls? And he put in parentheses, yes, $5 in Jan 2019. The OI is climbing past 12,000. So he's asking us, what's going on with that? Spoiler alert, he's talking up his own book because he wrote in this week and he said, oh, full disclosure time. I'm in those Facebook $5 calls. And he put, but why? Question mark, question mark, question mark. So he's keeping the mystery of these Facebook calls alive. If you remember, we discussed it on the show last week. Uncle Mikey speculated it might be some sort of, a way to do an end run around some sort of employee stock sale prohibition. I thought it might have been a box or some sort of carry type trade. The problem was it couldn't have been a box literally because there was the legs weren't there. It was just a one leg thing, but it could be some sort of carry play along those lines. And he wrote in to say, he says he thought Mike will be the first to slap his forehead, he says. So I thought maybe you were right, Uncle Mike. So we followed up with him saying, is that exactly what it was? And he said, no, it's actually more of a carry play. So I was right. But still, a lot of brouhaha about these $5 calls from the guy who actually traded them. So we have some sneaky listeners out there. He hasn't confirmed exactly, but it is some sort of box/carry play. Still interesting construction. I wouldn't mind hearing exactly why he went that route, because there are other ways you could do that if you were so concerned. It doesn't have the multi-legs. That could be one area that maybe is attractive in this era of commissions and also capital requirements. Boxes are getting a lot less love these days. A lot of market-making firms won't even quote them because the capital requirements are just too onerous. They literally can't make money on them. So maybe that's another reason why they have to go to that kind of route instead out there. The more single-leg type of box. Uh-oh, Uncle Mike chiming in. Uncle Mike, sir, what's on your mind? You think he's still doing an end run around stock sale prohibitions?
No, but I think in terms of a box-type trade, here's something interesting that is happening right now in Facebook, and it might not be these exact strike prices. It probably isn't, but here's a thought that it might be on it. So let's say right now you buy Facebook, and you go 1 year out, or let's go to January of 2019, not quite a year, 340 days. Facebook's trading at 176 right now and some change, and you buy the 175 calls. And let's say that you're able to get in on them for let's say, $18.30. You can simultaneously sell the 180 covered calls, and let's say that you can get in on those for, I'm being a little bit generous here, but let's just say $21.30. I'm being generous just because of the fact that I want to do easy math here. So you have a $3 credit. Now the $3 credit, what that does, and once again, we're owning stock here, the $3 credit, that takes care of the $1.30 of risk between 176.30 and 175. So now you have $1.70 credit and $5 of potential upside. So by doing this trade, doing this modified collar, which is kind of like a skew fund type of trade on this, you're pretty much guaranteed 1% or close to 1% over the course of the year, not including commissions, of course, and assuming you get these fill prices that I'm saying. And what that does is that actually gives you the ability to have some upside, but if the Facebook goes down, then you also have that credit that you received on the premium. Now, if you replace, here's the theory to the listener. I'm trying to decode this. Maybe am I on the right track? Please let me know. Instead of owning the stock, you own those $5 calls. That's going to give you a slightly better rate of return on your investment. So that is my next theory as to what this trade could be, something along those lines.
He's bumping up his IRR with that nice little $5 extra bit of juice. Interesting. You know, there are a lot of ways. I've seen a lot of people are trying to take new ways to kind of skin that type of trade these days. Like I said, the old ways of doing it are just too capital intensive. You can't really do it anymore. So this is one interesting swing at that bat. I don't want to spend too much time. We've already talked about it a lot, but it is interesting. If you got you guys out there with questions like this, discussing things like boxes and carry trades, that kind of stuff, this is an interesting one to look at on your own. Speaking of $5 strikes here, we got more follow-ups. This one from Johnny Bananas, who wrote into us last week or so, I believe it was. He had a lot of questions about puts. I remember he was saying his puts dropped below this $5 strike price, and it dropped to $3. Is it still worth money? And the answer was, we talked about it on the show. Yes, clearly it is. It's worth $2. He still seems to have problems. He says, even though my strike price is $5, so if the stock price is $7 and it drops to $5, which is my strike, but then ends up going to $3, is my option worth $4? So I don't have to sell if I reach my strike price. Is the same with call options. That's what confuses me, is the strike price, #learning. Well, I get you. You're learning, Johnny. A good handle, by the way. I guess we get you back on the show. I like the handle. Johnny Ben has 1, actually. So he's the first. But yeah, I don't know about the 7 to if it's going to be worth 4. Obviously, it depends what month, what your delta, all that fun stuff is. I encourage you to check out our Options Bootcamp show, which does all that basics for you in a lot more detail. But in general, the stock drops below your strike price, it is going to be worth the differential, for the put side anyway, between that strike price and that. At minimum, that's what's called the intrinsic value. And you got a lot of other extrinsic juice. I won't bore you with the details of that. Go look that up on Options Bootcamp there. It gets kind of confusing. But still, at the end of the day, it's going to be worth at least $2. And yeah, if it hits your strike price, you don't have to do anything. You can let it expire worthless. You could sell it in the marketplace. You can do whatever you want. You're not obligated. If in that case it's so much in the money, it will be. You will see. People usually are going to exercise or have those auto exercise for you in that case. But in general, if your stock's below your strike price, in case of owning a long puts, you're a happy camper. Even if it dropped from 7 all the way through the strike price, you don't have to do anything. It'll happen. You don't have to do anything. It's all right. But you can sell it. Yes, you don't have to wait till expiration. So, the strikes are. I understand why they could be confusing. A lot more. Speaking of confusion, let's get to this one. We touched on this on vol views, but I thought it'd be good to, answer this again here because this is such a popular question these days. This came from Chris T. He wants to clarify. He says, the most I can lose buying SVXY is the price I pay, correct? So I can buy it around $10 and treat it like a lotto ticket call. I wouldn't treat it as anything else other than that at this point. That said, Mr. Rock Lobster said we touched on this. Oh, yes, you can redeem yourself. If you want to chime in on the last one, too, Mr. Rock Lobster, you can redeem yourself with that one, too. But in general, for our friend here, Chris T., he's confused by SVXY. Can he lose? It's an inverse product, so you can see why he's a little bit scared. Can he lose more than zero owning SVXY, sir?
As an ETF, I believe, I think the short answer is no, because they will close the fund before then, meaning they are going to buy back their futures and close it out and shut the whole thing down before they lose more than your inverse. So I haven't seen anything in the prospectuses yet that said you can lose more than your investment. I have not seen that yet, but I could be wrong because I'll say semi-sure that they also buy some upside to kind of protect a little bit to keep things from being ridiculous. But I don't remember in any prospectus saying you can lose more than your investment if you buy SVXY. I know that I do remember XIV, they're being pretty clear that, yes, we could shut this down if the futures move more than a certain amount. So anyway, that's where I am on that particular one, because I'm looking at SVXY right now as well. So I can't say that it's calling me a little bit.
Yeah, spoiler alert, I took a little bit of a flyer myself in SVXY. Now, I won't touch the underlying because I would then have to hedge it like crazy. It's not worth doing, but I'll take some flyers on some calls for fun. So that's kind of what I was looking at today as well. Because you're right, it is totally lotto ticket territory at this point. I would not I would not want to own that $11 because you're right. It can go to zero, obviously, as we've seen. I haven't seen anything in any other lines of prospectus like you who has the XIV prospectus was a lot more clear in terms of the acceleration event. SVXY prospectus seems a little bit more murky, so I can see why maybe that's why he's a little bit concerned. But in that sense, no, probably I'd say I don't know, very high. To use the incorrect definition of delta, a very high delta of it not happening in that sense. But yeah, if you want to take a flyer, if you want to trade this thing, I would definitely use it as speculative capital because we have seen what can happen to these things. At the end of the day, the issuer could just want to wipe his hands of this thing and take it off the boards and maybe not want to deal with the regulatory heat that's coming its way or other things. So there is still a delta of bad things happening to this. But if you want to take a flyer on some upside calls, which are getting they were pricey for a while there. They're getting a little bit more reasonable these days. Maybe that's the way to go. Speaking of these, Mr. Rockhouse, maybe I'll let you redeem yourself with this. I don't know how much time we have for this. Maybe we'll save this one. I should do it really quickly. We were talking about this before. Actually, you and I were talking about this last week when all the madness was happening, Mr. Rockhouse, because I know you guys like that downside put wing in VXX. Of course, the erosion trade kind of got reset. I was kind of looking at it myself a lot last week. I waited because I knew, like we were talking about off the show, that those puts were that wing was just juicy. It was crazy. You knew it had to come in eventually, but now it's coming in a lot. Gerolo saying, dude, what's up with VXX puts getting crushed? The ETF is down 5%. It should be up, Mr. Rock Lobster. That put wing was looking pretty rich. Looks like they finally came for those Jan 10 puts today and the rest of the put wing. What's going on out there?
Well, as far as you mean, is what's going on as far as VXX moving when they were crushing VIX? The problem was just VXX remembers all futures. It's not the cash. So there was a lot of funky pressure on the futures, and also the amount of the term structure or the backwardation part where this Feb is still pretty high. The March future is only 20. So most of the value of VXX is just the March future, and that is not doing very much relative to what VIX cash is doing. So that's why there's all that funk going around and how it's pricing. VXX is not actually going to start to fall apart until that March future, which is VXX is about 95% March future, until that thing starts to tank. Now it started to drift down a little bit today, but that's what you're looking for, and hasn't done it yet.
Yeah, I think he's talking specifically about like those Jan puts you guys were looking at, and just the put wing in general. It got very elevated, and it seems like finally it took it shellacking today, even though the underlying was down. I think that's probably what confused him.
Oh, okay. Yeah, the vol was down much more than anything else in those today. So, because actually those we were still up, or still are up money on those puts even with the vol up there. So, net volatility, actually IV is down much more than VX is down today. So that would be the cost on those Jan junkie puts out there. Let's see, 1 point of volatility on the 15 strike is worth about $3 a contract. So, that's a pretty good chunk of change with vol down 12 points. So that would work out to about 36 cents a contract or something with the way the vol has come in that far out on those. So that's what's happening there.
Kind of like the inverse of the earnings call trade. How come I bought calls and the event happened, and how come I lost money? Similar story here. The vol comes in, it's gonna hurt some stuff. All right, let's keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, we got everyone's favorite popping off tomorrow before the bell. Blue Apron, of course. Also got Under Armour before the bell tomorrow, so it'll be interesting to watch those. That aside, Mr. Uncle Mike, we'll start with you, sir. What are you watching for tomorrow and the rest of the week?
I want to see if we can get back to positive on the year for the S&P. Particularly SPY. We were for a little bit today, but want to see if we can make that happen as well. Various earnings as well throughout the week, and curious to see how it plays out in the markets with this new $1 trillion infrastructure investment that we don't know where the money is going to come from. So, but it must be good, I'm sure.
And Mr. Rock Lobster, same question for you, sir. What is on your mind here in this growing madness of the markets?
I'm looking for 3 days of up, and I'm looking for a couple of days of not up so much, just sort of back to boring to see if we get any change in the vol trend at all, and looking for just select equities, especially oil stocks that are kind of sitting there and waiting around. So both those things, if we actually see it, and a little flattening of our turn. Obviously, since the March future will be the first one, then the Feb future is gone. So just see if that VIX cash gets anywhere near that March future again, and that's kind of a little signal that things are starting to normalize. So we haven't seen that in over a week, so those are two things. There's going to have a ton on the economic calendar, and the earnings are good. So it's all right around that nebulous interest rate higher thing.
It is very nebulous. This guy had the worst welcome to the job and the Fed that I can remember in quite some time. But if that future lines up with the cash, it might make some of you VXX put holders a little bit happier as well. We shall see. Of course, that music means we're done. We gots to go. But before we go, one last time, we check in with my cohorts, my partners in crime, see what's cooking with them. Let's start with you, Uncle Mike. You mentioned that kind of Facebook trade. If I'm intrigued by such trades, or perhaps I wish to just sling some skew with reckless abandon, where should I go? What should I do?
By all means, give me a call, 312-212-3531. Shoot me an email at mtosaw@rcmfs.com. And if you are in the St. Charles area by chance tomorrow night, stop on by. We have the St. Charles Investing Club meeting at my office. More than happy to have you. Just shoot me an email if you want more information on directions and signing up for it and that type of thing. We'll be talking about risk management tomorrow night and plan the trade the plan. Rather timely topic. We're excited.
There you go. Hit the man up if you're in the St. Charles area. Maybe our friend of the Facebook 5-hour calls will show up. You can have a lengthy discussion about all sorts of funky trades. Just like that. And speaking of funkiness, Mr. Rock Lobster, if I think the VIX is too funky, maybe I want a webinar to do some explaining to me. Where should I go? What should I do?
You can go purchase VIX Made Easy from our website, although we're doing a big upgrade over the next 2 days, so it might be tough the next 2 days, but probably by later Wednesday, you'll be able to do it. Also, my Vol newsletter will be coming out on the 15th. It's kind of been in sort of beta mode. Both of those things, you can just learn and watch and learn how to trade the Vol from afar. You don't have to do anything. Just watch the ideas come and go, and you will learn something by osmosis. Videos, recorded videos, explaining how all these trades and how all this vol works. Probably the easiest way to learn to trade vol. So yeah, I guarantee you will learn something in the 6-month time and maybe make a buck or two.
There you go. The man guarantees it. Check it out, optionpit.com, to learn more. And on behalf of the Rock Lobster and Uncle Mike and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, subscribing, sending in so many questions. I know you guys have a lot of questions on the brain. Don't worry, we'll get to more. We'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.